What's up, guys? I wanted to share this with you guys today as we move into 26, why I still think real estate's gonna beat the stock market. If you watch the stock market go up, go down, everybody's betting on 26 to be a better year as it relates to stocks because of the tech market. I think tech had the market kind of going crazy today. The AI, everybody's talking about this AI bubble. Then we had Bitcoin go on a run, and then we had Bitcoin kind of coming down, and everyone's betting on it, still doing what it's supposed to do, which that's why I was telling you guys, real estate to me as a real asset is always better than the stock market, your cash, Bitcoin, crypto, your retirement savings, all of those things, right? So I'm gonna go over this with you guys today. My board, are these locked? Yeah, they're locked. All right, let me move this some. I'm going to go over this with you guys today. Not going to keep you long, but I want to convince you guys that if you're going to make any investments this year, if you haven't already been investing in real estate, you should be looking at real estate as it relates to the best place to be able to move your money and be able to protect it. All right. So, number one, real estate versus stocks. For me, this is the number one thing, and Warren Buffett and Steven Schwarzman and anybody that's in the investment space. Number one thing everybody's looking at is capital preservation. That's CP. Preserve, preserve your money, preserve your capital. So anytime I'm looking at any investments or where we're gonna, that's why we chose real estate for Bell Capital as a fund. I've been doing real estate my whole life. I come from the real estate space. I actually don't even own any stock, but I know 1000% as an investment, preserving your capital is why I believe real estate is always going to beat out the stock market, ETFs, mutual funds, putting your money in Fidelity or Vanguard, all these other big firms. Like everything you do is always going to be tied at some point to the stock market. All right. And that's why, because you want to be able to preserve your capital. It's going to go up and down. The next one is it provides passive income, right? Or like we like to say, cash flow. This is important because not all stocks provide a dividend. Apple doesn't provide a dividend. Tesla doesn't provide a dividend. Meta doesn't provide a dividend. Ford Motor Company is probably going to, they're on their way up. Some of them provide dividends, some of them don't. But that's the problem. You always need to put your money in a place that it's going to continue to provide cash flow and passive income. That's why I believe real estate's better than the stock market, all right, from those dividends or those distributions. Next, you have controlled, controlled appreciation. My marker's going down. I was just talking about it. If you guys been watching the stock market or you've been watching Wall Street, you've been watching CNBC, you've been watching Fox News, whatever, the stock market has continued to go up and down. You can't control that. You can't control the value of your stock. But in real estate, if we raise the income of that property, the value of that property goes up. So we can control the fact that our property will appreciate one over long periods of time, and two, we can control the volatility of it. We know what's going to happen. If we don't raise the rents, the value is not going to go up. If we do raise the rents or increase the income of the property, it doesn't always need to be rents. It can be additional income. We can cut expenses. Long as the value of that property or the revenue of that property goes up, we can control what's going to happen long term, which means that the value of that asset is going to continue to go up from an investment standpoint. All right. Next, I'm looking at tax write-offs. Now, with real estate, feels like the tax code is written for real estate investors, right? Because all that stuff gets passed on for real estate owners. You can write off all parts of your real estate, cost segregation, bonus depreciation that just came back to 100% based on President Trump. What else? The mortgage interest, there's so many the 1031 exchange. There's so many different things that happen when you're investing in an actual real asset, right? Versus the stocks. You don't get the tax write-off of your stocks. You don't get to write off your stocks. You don't get to you can write off losses, but why do you want to write off losses? Because those are real losses. Those aren't like depreciation in real estate where the IRS says, "Hey, we will allow you to take a paper loss on this property based on X, right? Or like whatever the code is." So, but this is one of the other things we're looking at. So when you compare real estate to stocks, it has better tax write-offs. The tax benefits can get spread onto you as an investor. I can't do that with the stocks. All right. And I'm going to change papers for this. So I'm going through this and I wanted to kind of just break this down a little bit as we move into what we're doing because we're getting ready to hit a huge spike expansion for Bell Capital right now. All right. So the next one is we can get good debt. I looked at it like this. If you bank at Bank of America, you can't go to Bank of America and then sit down with somebody in their loan department and go, "Hey, I want to borrow $1 million because I want to buy Bank of America stock." They aren't going to give you that loan. Period. End of story. So real estate allows you to get good debt. If the property's cash flowing, if it's in a great location, if it's in an area where that property and the asset is going to continue to grow and scale and move, you can get great debt. Again, real estate, it has Fannie, you got Freddie, you have life insurance companies, debt funds. Hell, Wall Street actually has products that they lend on these big multifamily institutional quality assets. Dude, if it's good for them, they're taking their money and putting it in real assets. You should too. But for real estate, as it compared to stock, you're good. You can get good debt. You can't get good debt on your stock shares. You can't go borrow money against to buy stock. You have to own the stock, right? So that's why we like real estate as it relates to an investment vehicle for to invest capital in for the fund. All right. The next one, it protects against inflation. Well, and here's the thing about protection against inflation. So the value of your asset goes up with inflation, right? Because it's a real asset. It's got bricks, it's got steel, it's got glass, it's got concrete. The rents are going to go up with inflation. Rents have gone up in this country on the average, uh, I would say 8 to 9% since 1945 and maybe more than that in some years, right? Rents when I was growing up, when I was born in 1973, were 100 and I think $8 somewhere in there. And now the average rent, the average actual rent across the United States is somewhere around $1,700 a month. And if you live in California or Hawaii or New York, that can be anywhere from the average rent could be anywhere from $4,000 to $5,000 a month if you're going to be living in a place that's nice. All right. So it protects against inflation. So it's an inflation hedge. But here's the other thing. If you are invested, you have your money invested in a real asset, you want inflation because that's a natural lift, right? I was listening to Steve Schwarzman, an interview he was doing, and he was like, something about the tides lifts all ships. So at some point, if you're in a real ship, as the tide comes in, which is inflation, it's an inflationary scenario, it's going to go up in value, right? So stocks don't go up in value based on inflation. Stocks go up based on manipulation. So that's how I looked at it. So I was like, dude, I want to be in an asset or want my money in an asset, our company's money in an asset that gets to fight inflation, that gets to ride the wave of inflation and be able to be the benefactor of it and take advantage of those things, but also have the protection. All right. The next one is proven over time. It's proven. Proven. I'm gonna stop writing so long because I'm that's a giant sentence, right? It's proven for thousands and thousands of years. Everyone knows that. Like from biblical times, Jesus, they all moved, everybody moved, cavemen moved, Adam and Eve did their thing, left the garden and left to go do what? Find some real estate. So it's already proven. People understand it. And for multifamily real estate, housing. People need housing. AI can't AI it away. Tech can't tech it away. Bitcoin can't Bitcoin it away. None of that stuff. People will always need a place to live. So real estate as an asset class to be able to invest your money is a proven asset class. We all need this, and there's different versions of it. There's not all real estate is created equal. I'm talking about multifamily housing, real estate that is in multifamily, 100, 200, 300 unit buildings, that buildings that are at scale. All right. So the next one, it's easy to finance. Easy to finance. I'll just do that. Easy to finance it. Now we're talking about good debt. Yes, you can get good debt. You can get 65, 70% debt, very low interest rates, but it's easy. A lender's going to look and go, yeah, that makes sense. Why? Because it's a real asset. Do I have real on here? Yeah, not yet. Anyways, because it's easier to get a loan for something real so that loan is backed by, which is easier to get the financing for it, by a piece of a real asset. So it's way easier to get the financing for that. Like we said, go to the bank and try to get financing for your stock. That's a piece of paper or it's digital. It's not as hard, it's not as easy to finance something like that because it's not real to any lender, right? So next one, it's easy to scale. I like the word easy, but we'll just write scale. Like you can buy, like, for example, would you rather buy one single family house or invest in one home, like what the bank tells you, hey, buy a home? Or would you rather go to the bank and they go, look, there's 200 units, basically 200 homes at this one address with people there paying every month on a lease agreement that are qualified to be there. It's like that's what you want. If you bought a business, which that's what you're doing, wouldn't you want a business that has thousands of customers coming in every month paying that are qualified on contract? Or like Netflix? Or would you rather have one, you buy a business and it has one customer, comes in once a month maybe, and eventually they leave and now you have to pay for it. This is why I believe real estate's better because you can scale that way. Yes, you can scale stocks. You can be like, okay, if I bought one stock today, that's one stock. But with real estate, if you invested $1 in a piece of real estate, that $1 is worth $3. You invested $1 million, that $1 million is worth a $3 million position in a piece of real estate if as an investment. So that's the difference of scale because you have multiple doors. The number one most important number in real estate is the number of units. Period. End of story. How many units are going to dictate how much money you're going to make? All right. Almost done with this too. So the next one is hard to disrupt. I was just talking about this. Hard to disrupt. Yeah. Cool. So AI is not going to disrupt it. It'll make it better. Maybe management, communication. If you call the office, you have a problem or something like that, you get to talk to somebody, get your questions answered. But you're not going to take away housing. AI can't take it away. Technology can't take it away. Your phone can't take it away. Bitcoin can't take it away. It's really hard to disrupt housing. Now, there is a situation I talk about all the time. The way that maybe real estate could be disrupted is they're able to print buildings faster, right? So let's say, because I think Pulte Homes is doing this right now, if I'm not mistaken, somewhere in Austin right now, they have a project where they're just printing homes. What used to take 24 months or 3 years to be able to do a development is now taking 12 months with less manpower and less cost. But you got to have, that's a big firm to be able to do this. That could be a disruptor, but here's what's going to happen. If you can build the homes faster with less cost, what's going to happen? The value of the land underneath those properties are going to skyrocket. Because let me tell you, if I own 70 or 80 or 100 acres, that was going to be purchased by like a Pulte Home or KB Homes, and I knew that they were going to come in as a development company coming in to purchase my assets, and they were going to print homes, and they were going to get it done fast. My land is going to be sold to, I'm going to rip their heads off at a premium. That would be the only disruption that I see happening. It is happening, but it's not going to affect existing multifamily real estate like we're looking at housing per se. That's what I'm talking about. So when you think about that from an investment standpoint, now, are stocks hard to disrupt? Absolutely. Bad media, bad press, bad research and development, big pharma, Wall Street scandals, people committing adultery on their wives makes some share go down. Disney has some type of problem for being anti-Semitic. The values go, the stock market goes down. It's easy to disrupt the stocks, but it's not easy to disrupt a real asset that is stationary that people need. All right, it's not going away. Last but not least, it's liquid, illiquid too. Now, people don't like that. Real estate versus stocks. Stocks are liquid. Real estate is an illiquid asset because your money, once you take your money, you convert your money from the bank, mutual funds, money market accounts, and your retirement savings into a real asset. It's there. It's not going anywhere. You can't wake up tomorrow and go, boom, sell it because the market's bad, right? It's important to know that. My stuff's lagging. But it's important to know that real estate to me being illiquid is better because if you're illiquid and you don't have access to your capital because it's in an investment that's paying you while you're waiting for your money to double and triple, you can't let the market dictate what's going on to you. Like right now, Bitcoin went crazy, went up, went down. I'm sure people got in, they got out, people who are new to it, right? Because it went from 100,000 down to 80,000. Some people are committed to still buying, but because they can cycle in and out of it, they're liquid. All right. You can't do that with real estate. You can do it with stocks. You can do it with Bitcoin. You can do it with gold. If you're on an ETF, you can do it with crypto. You can do it with these other things that are like stock market, Wall Street related. But you can't do it with a real asset. All right. So to me, this is actually a benefit to investors, not a downside. All right. Stocks, great, trade in and out, but you can't do that with real estate. So I wanted to share that with you guys really quickly about why I believe real estate in a comparison from real estate to stock, a real asset versus the stocks in the stock market as an investment, why I believe real estate is superior to all of these things, right? Every one of them. It protects your capital. It provides cash flow and or passive income, right? There's long-term controlled appreciation in this deal. If you stay in it long enough, you're going to make money. Every 10 years, real estate doubles in values. You get the tax write-offs. That's better. You don't get that with stocks. You can get good debt. There's good debt on real estate. You don't also get that with stocks. It protects against inflation. You don't get that with stocks because you can't keep up. As your money goes down in value because it gets inflated into the market and you pull that money out, if you were stopped up in the stock market, your money just made money, but it didn't keep up with the inflation, with the inflationary periods. All right. Next, it's proven and it's tested over time. It has a proven track record. 2,000 years. Like the Vatican City, like all that real estate that's there, the Sixtine Chapel, all that stuff, all that's still there producing income and revenue, and it's been around for thousands and thousands of years. So it's a proven asset class, meaning real estate is concerned. All right. Next, it's easy to get financing for it. Any bank, any lender, you go there and go, look, I want to buy a 100 unit building, a 50 unit building, a 200 unit building. Here's the details about it. Here's the income of the property. And here's my management company. Would you finance it? And they're gonna be like, yeah, let's go. But if you go, look, want to buy Bank of America shares. I want to buy 1 million shares and I want to get a loan for that. Would you guys lend me the money? And they're going to be like, security. Get this guy out of here. All right. So next, it's easy to scale, right? You can buy 100 units, 200 units at one time, 300 units at one time. The main number, the most important number in real estate is the number of units. And you can't scale stocks that fast. 1 for 1 in stocks, 1 for 3 in real estate typically as it relates to the value. All right. And then that last two, hard to disrupt. They're not going away. You can't just push a button and make it disappear. You can't sell it today, which goes right back to the last one was like liquidity. Stocks are liquid. Yes, that's a plus for on stocks. Real estate is not. So if you combine all of these things and you really look to go, dude, what's a better investment? Long term, building wealth for me and my family to be able to take my hard-earned money that's sitting in savings in a bank, ETF, mutual fund, retirement savings, earning almost nothing, right? And when you take that money out, whatever gain that you had is taxed at ordinary income. So you're going to lose 30, 40% of it anyways. So if you're getting four, you're probably only getting two, right? Like you got to compare these investment opportunities and these investments while you're working hard. If you convert that money to real estate, you get all of these things I talked about. Right. So if you want to do that, compare where your money's sitting at, whether you're investing in the stock market, I would tell you this is why real estate's a better deal for you. It really is. So I hope that helps. Let me know if I can help you do anything. Let me know if you need anything. But share this video, like the video, comment on the video. Let me know what you guys think. All right. I definitely want to hear from you. All right. So let's stay in touch. Let's get after it today. Go. Boom.